Welcome back once again, and we're still taking a deeper look, comprehensive look over the many sides of the conflict, the military conflict between the U.S. and Iran, and the implications, of course, economically over the oil and gas prices, supply chains, food chains, and everything. Life over the whole economic map probably is about to stop in the very near future if no truce is reached. And we're very delighted to be having here in the studio live Dr. Ayman Ghoneim. Is an economic and legal expert. Good morning, Dr. Ayman.
Good morning, madam.
It's a real pleasure to have you.
Pleasure.
But now it's one of the most controversial aspects of this crisis, and the uneven distribution of economic gains and losses, while consumers and importing countries experience rising costs. Major energy corporations often benefit from elevated global prices and more. More details in the following report.
The ongoing conflict involving Iran is increasingly being analyzed not only as a geopolitical and military crisis, but also as a profound global economic shock with wide-reaching consequences. With the immediate focus of public attention is often on the human cost of warfare, economists and international institutions warn that the indirect economic fallout may ultimately affect far more people across the world. Rising energy prices, disrupted trade routes, financial market volatility, and uneven corporate gains are combining to create a crisis that exposes deep structural vulnerabilities in the global economy. At the center of these concerns is the global energy system. Iran occupies a strategically significant position near key maritime choke points, such as the Strait of Hormuz, through which a substantial share of the world's oil export flows. Even the threat of disruption in this region is enough to unsettle global markets. In periods of escalation, oil and gas prices tend to rise sharply as traders price and risk supply uncertainty and potential logistical bottlenecks. This has immediate consequences for inflation worldwide. Because energy is a foundational input for transport, agriculture, manufacturing and logistics, higher fuel costs quickly ripple through entire economies, increasing the price of food, goods and services. International institutions such as the International Monetary Fund have repeatedly warned that sustained geopolitical disruptions to energy supply can trigger adverse global scenarios. These include a slower economic growth, persistent inflationary pressure, and heightened financial instability, particularly in developing economies that are more vulnerable to imported energy costs and currency fluctuations. In such environments, central banks face difficult trade-offs between controlling inflation and avoiding economic contraction. Financial markets also react swiftly to geopolitical risk. During periods of heightened tension, investors often shift capital away from equities towards safer assets such as government bonds or gold. This flight to safety increases volatility in stock markets, raises borrowing costs for riskier economies, and can reduce investment in productive sectors. Emerging markets are especially exposed as capital outflows can weaken currencies and increase the cost of servicing foreign debt, further amplifying economic stress. One of the most controversial aspects of this crisis is the uneven distribution of economic gains and losses. While consumers and importing countries experience rising costs, major energy corporations often benefit from elevated global prices. Reports have suggested that leading oil and gas firms are earning extraordinary short-term profits during periods of sustained price increases, sometimes described in aggregate terms as reaching tens of millions of dollars per hour across the sector. However, such gains are highly dependent on market conditions and do not represent stable long-term growth. They also come with increasing political scrutiny and growing pressure for energy transition policies.
Welcome back once again. Very delighted to be having here in the studio Dr. Ayman Ghoneim. Is an economic and legal expert. Good morning, Dr. Ghoneim.
Good morning, madam.
From your own point of view, how does the U.S.-Iran war alter the stability of global oil and gas supply chains, particularly maybe through the checkpoints of mainly through the Strait of Hormuz, since it's often on the closure and opening?
Well, actually, the present conflict in the Middle East, it shows quite well that politics and economics are two faces of the same coin. And it really shows that oil is not only an economic commodity, but it's a political and strategic commodity. The price of oil is determined by supply and demand plus something called risk premium. A risk premium is assessed by the markets, by the international markets, as to the risk in the continuation of the supply chains, at the risk of the potential severance of the supply chains and the potential disruption in the production facilities. That's why we've seen that at the beginning of 2026, oil was, Brent actually, Brent oil price, and Brent is the benchmark that we use to price oil and to price different oil grades and categories. So Brent at the beginning of 2026 was in the range of $60 to $65 per barrel. On Feb 28th, 2026, it reached $73 per barrel, and that was because there were a lot of fears and expectations that something will happen, something big will happen in the Middle East. During the war, it reached around 114. The peak was around $114 per barrel, and there were many fears and many statements by international financial organizations like the IMF and the World Bank that the world might be heading towards global inflation. Then, after the truce was announced, oil declined sharply to $90 per barrel. But here we have to give a little warning that the $90 per barrel was still higher than the $73 per barrel at the beginning of the war. So that meant that the markets still assessed that the risks were still there and the risks were still strong. Now, of course, with the different statements and different expectations and the disruptions in the negotiations, we found that today oil is trading at around $104 per barrel. So this shows us many things. Number one, that oil is a political commodity, as I told you. And number two, that oil is a main factor in the global inflation, in the global and national inflation. And now, whenever you have an inflationary wave in a certain jurisdiction, in a certain area, it transmits to different areas. Now the world's economy is like connected tubes. And if you remember, during the Russia-Ukraine war in 2022, when the Brent oil reached $120 per barrel for some time, this spurred a wave of global inflation. In the US, inflation reached 9.1% in June 2022, and this was the highest level since 40 years, since the era of President Ronald Reagan. In the EU, inflation reached 10.6%, I think, in October 2022, and again, this was very high. And you can compare it to the target inflation level of 2% to see how much this is very high. Actually, that crisis and the present crisis enticed many countries to alter their energy strategies. Now, the medium and long-term strategies of many countries, many industrialized countries, as well as developing countries like Egypt, by the way, is to increase the share of renewable energy in their energy portfolio, in their energy consumption, especially in electric power generation, in order to avoid such crises. And that's why maybe in the coming 20 to 30 years, the outcome of the present situation in the coming 2 decades, you will find a power shift from the countries that are leading in the production of fossil fuel, like petroleum, coal, and to some extent natural gas, to the countries that are leading in the production of renewable energy.
Of course. So, but to what extent do you think can the global economy absorb this sudden loss of significant share of oil flows without entering into a recession? I mean, because the shadow of a recession or the fears of recession is looming, and it is threatening lots and lots of states, and that's why there are stress, there are different calls for effecting a truce in the real near future?
Well, actually, the Middle East, it controls more than 25% of the oil exportation, not oil production, but oil exportation in the world, and more than 20% of the liquefied natural gas exportation. And that's why with the disruption in the supply chains coming out from the Middle East, from the Strait of Hormuz, with the closure of the Strait of Hormuz, there were a lot of expectations that the world would be heading towards global inflation. The problem here is that the answer to the economic question is more of a political one. That's the first problem. And the second problem is that even the political answer, no one single player alone can have the answer. It depends on the interaction between different players. It's like, something like the game theory where the final outcome of the game depends on the interaction of different players, and some of these players can even sometimes take emotional and irrational decisions at some point in time. So it's the situation now is very fluid, and it's very hard to expect what will be the political outcome, and that's why it's very hard to expect the level of inflation that will reach, especially that the inflation does not only depend on the oil price, but on the time frame during which this oil price increase. For example, if oil remained high for like 1 month, then the inflation will not be that high. But if oil is sustained for 2, 3, 4, 5 months, and that's why Goldman Sachs, for example, it issued a statement during the war, expecting that if the war will take a longer period, then the oil may break its historic level of $147 per barrel, which it reached in 2008, and it can even reach $150 per barrel. And after that, we saw another statement by the chief of IMF warning that the world might be heading towards stagflation, which is stagnation plus inflation. Of course, stagnation because of the disruption in the supply chains, in the oil supplies, also the disruption in the trade routes crossing the Straits of Bab el-Mandeb and then Suez Canal, due to, of course, the political threats and the threats of attacks. So there were expectations that if the war will take a longer time frame, and if other parties would enter into the war, then the world might be heading towards stagnation plus inflation. And actually such statements may, and this is the good part, that such statements may exert some political pressure on different parties to start negotiating and to start seriously trying to reach a peaceful solution.
That's a good hint now. You pointed out a very good point, which is those financial experts and those financial enterprises, CEOs of very important financial enterprises, and those people who have taken a comprehensive look over the situation have issued those statements. Do you think that this is reconsidered on the U.S. administration side, while it is recalculating its vision over the Iranian file, while it is reconsidering all its all-in-all general assessment of the Iranian file? Do they take it in consideration when they are negotiating, or they have their own American agenda?
No, actually, many analysts, they believe that the world, including the U.S., cannot sustain a long period of inflation, a long period of high oil prices. Because in the U.S., if you look at the oil production and consumption in the U.S., first of all, the U.S. is the largest oil producer in the world, by the way. It's a producer, exporter, and importer. In the U.S., you have certain states that export oil, other states that import oil. you can the American middle class, most of them are oil consumers, and most of them now they suffer that they have to pay higher prices for fueling their cars. And most of them remember the Russia-Ukraine war in 2022, when the increase in oil prices led to a wave of inflation inside the U.S., as I told you. And that's why many statements coming out from the American administration used to say that the war would end soon, that we would finish soon, or that we could negotiate with Iran an armistice or a truce soon, or that we can negotiate peace terms actually with Iran soon, in response for such fears. But again, as I told you, when you're assessing a political situation which is the outcome of the interaction between different parties, especially now, it's a bit hard to forecast what will be the outcome, especially if you want accurate forecast and if you want a time frame for such forecast. But what I can tell you is the world would not sustain a period of long inflation. The world cannot tolerate that, and the US, the American people will not be able to tolerate such inflation.
The whole world,
yes,
actually. But then, from your own point of view, what could be the driving force, the real driving force that would force both sides to really end this war?
Many analysts believe that both sides now they want to end the war, but each side is trying to have the highest terms. And that's why it's important for mediators like Egypt, Turkey and Pakistan now to play the role of mediation and to try to bring together the different belligerents and put them on the negotiation table. Because both parties are suffering and the whole world is suffering, and it's just believed that each party is trying to get the highest terms or the best possible outcome.
Talking about alternative, we've talked about that so many times, but still we have nothing on our hands but to talk about this again. The alternative shipping routes that might act as an exit out of this conflict once it becomes to an end that cannot be controlled. The Hormuz Strait, of course that was not the foundation for this war, that was not a reason for this war, but however somehow it became involved, and then it is at the front line of this military confrontation between both sides. But then talking about alternatives, do we see, as a legal expert and as a financial and assessing the whole situation, do you see an alternative? And if there is an alternative, do you think it's going to be bring the same revenues, or it's going to sort out the whole problem, or somehow it could be a temporary one?
Well, actually, the alternative shipping routes for oil, it's a very difficult file. Why? Because the Gulf area produces around 25 to 30 million barrels per day. Now, the traditional shipping routes for such quantity used to come out from Hormuz Straits. And also we're talking about 20 to 25% from the liquefied natural gas exportation of the whole world. Okay, so if you're talking about exporting such big quantities through pipes, for example, passing through Saudi Arabia and then to the Red Sea and then to Suez Canal, it would take us a long time to construct such pipes in order to accommodate such big volume. So the idea that we will have a sort of alternative shipping routes, it's a medium to long-term solution. But now we're talking about the short term. No, the short term, everybody will suffer. We used to see some statements coming out from the International Energy Agency stating that the major economic powers will or would dispose of around 400 million barrels of their oil reserves. The problem is such amount, it may sound big, but actually it's no more than 3 weeks of production of the oil or of the Gulf countries. And that's why in the short run everybody is expecting to suffer, and this is actually the main pressurizing force on the different parties to try to reach a peaceful solution soon.
How does, from your own point of view, how does a geopolitical oil shock translate into that type of inflation across food, probably transport and manufacturing sectors, and could we avoid one and suffer from the other? I mean, could it be an all-in-all crisis? Well, because if there is an extension in time, then we should be having some type of strategy, some resilient strategy that could manage the situation somehow.
Well, madam, actually your question has 3 parts. Whether the oil and natural gas would translate into a wave of global inflation and the translation mechanism, this one part, and then the resilience factors for different economies, of course, including Egypt, which is our main concern. And third, we're talking about the energy strategy and how would we react to the present energy crisis. Now, talking about the translation mechanism, yes, of course, oil is a main determinant of inflation, and we've seen this, by the way, since the 1970s, since the oil shock, the oil embargo of 1973, when during the 1970s oil prices increased, doubled and tripled, and this spurred a wave of global inflation, and that's why at the beginning of the 1980s the interest rates on the US dollars reached even higher than 20%. It was so high. Talking about natural gas again is a part of the electricity production of different countries, including the European Union, and that's why the prices of electricity in Europe doubled since the beginning of the war. Also, natural gas is a main input in the fertilizers industry, so this affects, of course, the prices and the cost of the food and the vegetables, fruits, and different agricultural products. And here, if you want to take a bit of a deep dive here, we have to understand that such type of inflation is very dangerous, because you have 2 different types of inflation. You have a demand-driven inflation and you have a cost-driven inflation. If you have a demand-driven inflation, this means that there is an increase in aggregate demand due to an increase in the disposable income of people. So this increases the demand on commodities, on goods and services, increasing their prices. So it's enough for the central banks to increase the interest rates a bit, like 2, 3, 4% max, and then you will find that the consumption will decline, because you're increasing the price of the consumer loans and you're encouraging savings. But if it's a cost-driven inflation, it's a bit of a problem. Why? Because when you have a cost-driven inflation, this means, number one, that the income did not increase. So if the income did not increase and you have an increase in the price of goods due to the increase in their cost, already demand will decline. Then you want to increase the interest rates by a bit of high levels in order to strangle such demand, to reduce such demand which has already declined. So you want even to decrease it more in order to control the prices, and that's exactly what happened in 22 and 23 after the Russia-Ukraine war. The US increased interest by 500 basis points to a level of 5.25 to 5.5%, which was the highest level since more than 20 years. The EU increased interest by 3.75%. So how can we deal as Egypt with such situation? Actually, you have to remember that President Abdel Fattah al-Sisi...
I was about to ask that question,
yes.
by the way. Yeah, please.
Yes, sure. Yeah. The President had received the Governor of Central Bank just before the crisis started, and he briefed him of the external position of the country, stating that the official reserves of Egypt reached $52.5 billion, which is the highest level in the Egyptian history, actually, covering around 8 months of imports. and the net foreign assets in banks, excluding the central bank, reached around $11.5 billion, covering around 2 months of imports. So we're talking about 10 months of imports. However, as I told you at the beginning, it's very hard to measure the effect of the war or to expect the effect of the war, because it depends on the interaction of different political counterparties. And that's why it's important to take preemptive measures from now, and that's exactly what the government has done. Taking preemptive measures, trying to rationalize the oil consumption, trying to rationalize importation, early closure, because you don't know to what extent the war will continue, exactly, and then the inflation would reach how much and till when.
Right, on that note, of course. And this is what we're doing now. Hopefully,
yes,
inshallah, things will be more easier in the near future. Dr. Ayman Ghoneim, the economic and legal expert, would like to thank you so much and for your valuable input to the Breakfast Show. Thank you so much, and you have a good day. And by this, we come to the end of this edition of the Breakfast Show. Many thanks to all of you. Till we see you again tomorrow morning. That's a goodbye.